Thanks, ladies and gentlemen. I don't know how I drew the short straw last in the day, but we'll try and make it interesting, eh? All right, I like walking around. Too boring standing in the one spot. So thanks for the opportunity to talk, present to you today, give you a bit of insight to our business and what we do and what gets me out of bed every day. So I'd like to give you a bit of background to the business first, just to set the scene about what we do and I guess our 101 learnings on exporting to Malaysia. So this is what defines us. So this is our strategy. We continually invest, develop, improve and change our business to exceed the expectations of our customers and community through technology, innovation and listening. So the two key highlights there is change and listening. Some fast facts. So we're the largest chili company in Australia. We produce 80% of Australia's chilies 52 weeks of the year, serving 22 million people every day. We farm in 3 geographic areas. We farm in Stanthorpe, Bundaberg and Bowen, North Queensland, to give a year-round supply. We supply to Coles and Woolies direct. We have been value adding now for just on 18 years, which I'll give you a bit more detail shortly. Privately owned, family business and vertically integrated. Sorry, Jeff, I'll get my back to you. Intensive operations that I mentioned before throughout Queensland to manage risk as well as maintain supply. Very much technology driven, so from an agronomic sense right through to a sales and marketing sense. We've got 130 employees, we've got 37 different product lines, and we're exporting to 10 countries around the world. One of them is Malaysia. And we've got some world-first branded products. And I'm going to touch on risk-adverse modelling in a sec. So this is our facility here. We built this 10 years ago. These are our chili. This is our operation in Bundaberg. So all the farms that we farm are in the geographic area. Furthest farm is about 2 kilometres away from the plant. Receivables dispatch 5,000 square metres farming operation here, and that's Goodwood Road. So we're on the south side of Bundaberg. So just to put a bit of context of what the plant looks like. In terms of risk management, I like this model because it outlines, I guess, our success so far over time. So we started out as fresh chili. That was our primary production to start with, and then we jumped into the value-added gig, hence the fruit and vegetable purees, which I'll touch on. We launched the value-added brand, retail brand product called Avo Fresh 3 years ago, and we're constantly exploring new frontiers with innovation and market opportunities. My point here is around we're building a robust business by integrating different income streams against risk over time. So basically, we haven't got all our eggs in one basket. I just come back from, I'm a 2013 Nuffield Scholar, and part of the charter that I looked at globally was about supply chains and sustainability and innovation. And I drew this model basically to capture, I guess, one of my key outtakes from that research or study. And what it outlined to me was the primary producer has the highest risk and the lowest return, and the retailer has the lowest risk and the highest return. So for me, value adding, I think, is a good path to get as close as we can to the point of sale to the consumer. So essentially, you want to try and move as far right along that chain to capture as much of the profitability in the share as you can. The other thing is that big red line that says cash flow. It goes backwards. So the farmer's the last person to get paid. That's not where I want to be. So there's some of our products in the marketplace. Fresh chilies, Coles and Woolworths, you guys would have seen that before. Pre-packs, etc. These are some of the aseptic purees that we do. So we do over 30 different products. We started with chili, and then we expanded everything from ginger to lemons and limes. And what this business is about is creating a non-perishable ingredient that goes to manufacturers. So the likes of the McCormicks, the Heinz, the Unilevers, globally. We send a non-perishable product. And this is essentially the product that we're exporting to Malaysia, which I'll touch on today. That's the Avofresh product. Hopefully most of you have seen that in the supermarket. The product's doing really well. That business is built on basically making avocado convenient, making it reliable. So this product has just started being exported now. So we're working with cold storage in Singapore. We're just putting our toe on the water. We're, crawl before you walk, basically. So my experience of exporting in Malaysia. A lot of it's been mentioned today, but hopefully I give you a little bit more insights from a grower, primary producer, value-adder perspective. So we've been exporting to Malaysia now for 10 years with the aseptic fruits and vegetables that I mentioned before. And during this time, I've seen Malaysia particularly grow as one of our largest customers that we're doing business with. Malaysia being the third largest economy in Asia, as was mentioned earlier today, And what I like about Malaysia, it's a medium-sized fish. You know, it's not the big end of town where you're not in North America, where you're not going to Fiji. You know, it's a nice sized fish to capture. Foreign ownership laws have certainly changed a lot in Malaysia over the last decade, and that's certainly supported the ability for us to supply that country. And I think Malaysia's geographic location, you know, you can jump into KL and get a short flight to anywhere in Malaysia. It's quite central to Asia. Numbers we referred to today, you know, the stats that I've seen was Malaysia's growing at 4 to 5% of GDP annually, and you know the number there, 2020, we're all familiar with that number. You know, being a high value added and very much a consumer knowledge-based society. There's quite a few large-scale manufacturers now in Malaysia, which gives rise to opportunity for businesses like myself. And I found that doing business in Malaysia, I think, is a lot easier than a lot of other countries, and that's made reference today. Australia's got a solid reputation of reliability, quality, consistency, and there's no doubt about it, we need to leverage that. Interesting, with our, just to give you some I guess some real close insights, our terms of trade typically with Malaysia are 30 days from delivery, but that's starting to creep out further and further. The multinationals are starting to push out further and further. Even in Australia, you know, we've got some accounts that are 90 days, and there's one company recently that wants to push out to 120. My point there is factor that in. So when you go and do your recon and understand these markets, one of the key things is understand the trading terms, factor that into the price. Be prepared to carry the money. That's not everyone. I'm just giving you some insights to our experience. Exchange rates, I only sell in Australian dollars. I don't hedge my bets. I don't muck around with US currencies, CFDs. I don't muck around with any of that. It's Australian dollars. Non-perishable products, if there's one thing you take away today, I think this would be it. Our success in Malaysia, bear in mind I'm selling chili into Malaysia, so they can get it from China, they can grow it locally. How am I, a little guy in Australia, selling all this chili to the Malaysians? And the driver is because the product's non-perishable. So I've got a shelf-stable product with a high quality, high consistency that's available 52 weeks of the year, and it can be relied on. Of course, they can buy cheap Malaysian raw material at $1 a ringgit per kilo, you know, very cheap product, but it's unreliable. And the supermarkets globally, if you look at a bottle of chili sauce, they don't really care about your problems. Just have the product here on time, in full. That's all we want to know about. So what's happened is these businesses have really had to ascertain, so how are we going to risk manage our supply? Yes, we can get cheap raw material for 8 months of the year or 3 months of the year, depending on the raw material, but is it reliable? Weather impacts, global warming, global changes, acts of God, they're becoming more and more frequent. So manufacturing businesses globally are turning to non-perishable formats to say, how are we going to risk manage our business going forward? That's how I've been successful in Malaysia. We're in 3 years, the last 3 years, we've doubled our business to Malaysia. I've also found that we deal with European-owned manufacturers in Malaysia and also Malaysian-owned manufacturers. And there's a slight difference. The Malaysian-owned businesses are, I find, are better to do business with. It's built on relationships, it's built on trust, it's built on integrity. The flip side of that is that typically Malaysian manufacturers are not quite as speedy as the EU companies. Their speed to market isn't as quick. So, you know, we have high expectations. Oh, when's that new product coming out? You know, oh, it's 2 years. What do you mean 2 years? The world's changed in 2 years. So there's considerations on both sides, but out of preference, you know, I'm a relationships person. Relationships and integrity comes first before anything else. You got to put that first. And particularly with Malaysia, we've found more success with the Malaysian-owned manufacturers than what we have with European-owned. The other interesting point I'd make too is that some time ago, a lot of, I guess, European money looked at Malaysia for manufacturing, for cost of goods, a lower cost of goods and efficiencies. That hasn't been as sweet as what they thought. The Malaysian culture, you know, you have three people to do a job of what one, you know, Westerner might do. So the efficiencies in Malaysia aren't quite as good as what they thought. So Samsung and I can't say who, but there's several manufacturers, 2 of them that I know in Malaysia at the moment, that are looking at pulling out because their cost of goods are just far higher than what they thought. So just consider that as well. Some approaches to Malaysia. begin with the end in mind. Understand your market. Understand the unique selling proposition. Understand the target market. Don't fight in commodities. Don't bash your head against the wall. If you're going to go into a price-driven market, you're wasting your time. Find your niche. Find the gap and work hard to capture that. I can't stress this enough with Malaysia. Spend as much time as you need with your customers. You can't rush it. It's a slow-moving market. Meet with them yourself. Personally, I don't like distributors because they don't add value. Depending on your distribution model, I supply manufacturers, so I have the opportunity to meet with my direct customer and work through that. Distributors have value from, if you're going into the retail trade or, there's necessary evils in that perspective, but no one knows your product like you. And when you can get on the phone to your customer, work through the issue, the problem, or even better, the opportunity, that's where you want to be. So my recommendation is we don't, globally, we've got 2 distributors. So, and that's the way we like it. Invest in trade missions. We're doing another one this year with Trade Invest Queensland to South Korea to look at some markets over there. Austrade and state bodies provide a fantastic linchpin to these markets. You don't have to go and forge them yourself. Excuse me. Market intelligence is critical on the back of that. You're not flying blind. You can burn a lot of money in export market development very, very quickly. With Malaysia, do what you say you're going to do and exceed their expectations. Don't do half a job. You need to build their trust. Go and see them once a year. Don't go 3 years without seeing them. It's relationships driven. One of the big advantages that I've learned is that inviting them to Australia, because when I can get the quality manager, the technical manager, the R&D manager, the general manager to my site, a couple of key things happen. It brings you closer to them. It's easy to get a price rise. They understand your business more, and they feel closer to you. So by having them come and visit and understand your business adds a lot of weight to the relationship, but also the opportunity value within that as well. And likewise, try and get into their businesses as well. Understand the supply chain. Understand how the product's handled. Understand the challenges and the opportunities as well, because collectively that's when you're strong. I'll give you an example. We were under some pressures a few years ago, 5-6 years ago. We were supplying red chili puree into Malaysia. They said price is too expensive. I was there at the time. I went into the factory and had a look, and they were buying green chilies off the local market and blending it with my red chili to dull the colour. I said, why are you doing that? And they said, well, the colour's too bright. It's too bright. It's too good. I said, well, I throw that stuff out. So all of a sudden I started putting it in. Lowered the cost of goods and set it through. The key there is understand the process. Understand how the process and if they are adding value, what that process is and how you can add value to that. I do an annual price review now. We did it the hard way. We went the first 6 years without a price increase. Absolutely shitting myself. Flew them over and I got 13%, and they understood. And ever since then, we've done an annual price review. We open book, we're up front. At the end of the day, we just want to be sustainable, and they want us to be sustainable. You're not dealing with the third world. You're dealing with professional businesses, and they really understand at a global level. So, look, in summary, Malaysia has certainly been certainly a rewarding country for us, and we continue to break new ground and increase volumes into that country. I can't stress enough to develop the relationships and increase that trust, and with that will come the reward. But bear in mind, it's not going to happen overnight. I find any export business is a medium-term investment. It doesn't happen overnight. It's a long return on investment. So just consider that. So with that, hopefully I give you a bit of insight to what we do and what the opportunities are. And any questions?